In today's video, I'm going to give you my prediction on the stock market, inflation, and the recession. First, let's make sure that we're on the same page. When it comes to our economy, what is going to determine the direction of our economy? It's going to be monetary policy that determines the direction of our economy. Now, what is monetary policy? To me, monetary policy is interest rates and how much money is floating around in our economic system. If more money floods the system, then we're gonna get inflation. So I think that's a pretty basic concept. If interest rates are low, then the cost of borrowing is cheap. If interest rates are high, then the cost of borrowing money is more expensive. So it all boils down to interest rates and the supply of money. So are we on the same page? Do you agree? Now, who controls interest rates and the supply of money? It's the Federal Reserve. And the Federal Reserve, they said two things. The first thing that they said is that they're going to continue raising interest rates. The second thing is that they're going to take money out of our economic system. So this is the opposite of money printing. This is called quantitative tightening. How high and how quickly they're going to raise interest rates, that's going to depend on inflation. How much money they're going to take out of our economic system, that's going to depend on inflation too. The stock market has been rallying. This is a dead cat bounce. I already warned you about this. I also said that this dead cat bounce, it can last for 6 weeks, 8 weeks. That is expected and normal. So here's what you don't know. When the Federal Reserve, when they perform quantitative tightening, it crashes the stock markets. So it's a simple concept. If they flood the system with money, there's so much money in the system and people buy financial assets, including stocks. You take that money out of the system, it's the opposite effect. The market goes down. Don't fight the Fed. The Federal Reserve said for June, July, and August, they will be sucking out of the system $47.5 billion a month. Starting in September, it'll be $95 billion a month. That was a straight up lie. So they have not been doing that. Apparently, they meant they could tighten by up to those amounts. They have not been. The Federal Reserve, they release the size of their balance sheet every week. So you can check it for yourself. Check June, check July. They just straight up lied. If the Federal Reserve reduces the size of their balance sheet, if they tighten and suck that money out of the system, then that's going to crash the stock market. And that would probably be bad for the midterm election. However, if they don't tighten, inflation, it's not going to fall as quickly as we would like. And inflation rates of 8.5%, that is still ridiculously high. That's at unacceptable levels. So not to mention that those are government calculated figures disconnected from reality. So this dead cat bounce that we're seeing right now, the party's going to end when inflation gets stuck and they need to tighten out of necessity. So that's probably going to happen in the next few weeks ahead. Whether that's going to happen before or after the midterm elections, I cannot make that prediction. Now, here are the pieces of the puzzle when it comes to the economy. The Federal Reserve will continue raising interest rates. The Federal Reserve said that unemployment will go up. The Federal Reserve said that the economy will weaken, and they want it to weaken. That's because with a weaker economy, spending goes down, which slows down inflation. So those are the pieces of the puzzle, and when you put them all together, you'll see that the economy is going to get worse. I'm going to give you a warning. Bitcoin is going under $20,000, and the crypto crash, it's going to get worse. And I'm going to tell you why. We have the macroeconomic environment working against us. We have a recession. We have the Federal Reserve working against us. They're doing quantitative tightening. We have the risk of Tether being the next Celsius and Luna. We have the risk of Michael Saylor getting margin called. In the short run, Bitcoin, it's temporarily going to go up. So you're going to see a bounce up. It's going to come down. And then it's going to crash hard. So this is going to be your classic dead cat bounce. And I hope you understand that historically speaking, when Bitcoin reaches the bottom, it falls 80% or more from its peak. So you can take a look at you can take a look for yourself. 2011, Bitcoin falls more than 90%. 2015, Bitcoin falls 83%. 2018, Bitcoin falls 84%. 2022, Bitcoin is down 69%, so a little bit more to go. If history repeats, I'll see you at 12,000. And a lot of people are saying this time it's different. And that's what they said in 2015 and 2018. But no, really, this time it's different. That's what they said in 2015 and 2018 also. If you think the pain is over, do you realize that the Federal Reserve, they just started the quantitative tightening process? So they're going to be sucking out $47.5 billion out of our economic system each month. In September, they're going to be upping it to $95 billion a month. That's going to be a very challenging macroeconomic environment. So more money in the system, asset prices go up. Less money in the system, asset prices go down. So we got through the bad news. Here's the good news. We're going to crash, but we're going to get through this. And the crash, that's going to be an opportunity for you to make a lot of money. You buy low, you sell high. But you have to be patient. Don't get antsy. That's for amateurs. So I understand that you want to score big overnight, but that's not how this is going to work. If you want to get rich, you're going to have to play your cards right and wait patiently for the crash, the big one. That's when you're going to deploy your capital. And we're almost there. So the big question is, when is the Federal Reserve going to discontinue quantitative tightening? I guarantee you it's not going to be tomorrow, it's not going to be next month, but it might be sooner than you think. It may be as early as Q1 of 2023. So in reality, the Federal Reserve, they inflated financial assets during the pandemic. So Bitcoin and altcoins, they were no exception. The Federal Reserve, they crashed cryptos and they're going to continue crashing cryptos. And then the Federal Reserve, when they stop tightening, because they're forced to, that's going to create new all-time highs for crypto. Until then, enjoy the dead cat bounce, prepare for the crash, and I'll see you under $20,000. Please take care.